Good afternoon, everyone. This is just a short budget webinar. Today's obviously Tuesday, the 10th of October, and we thought we'd just put together a very short session. We will allow questions for anyone who would like to ask questions, and please feel free to do so in the chat function. My colleague Cleena is going to be basically dealing with any questions that come up, and we will look to address them. I'm going to just give you kind of the main headlines on the announcements today. Some of you have probably heard some snippets from the news or radio, but I'm just going to give you kind of I suppose, a context for what we took from it. So we've just sort of subdivided this into tax, children, welfare, housing, and cost of measures of welfare and cost of living. And just, I suppose, the biggest takeaway really for anyone listening to this call is that for anyone who, I suppose, is on their own, earning approximately, let's say, 46,000 a year, this was the example given by Michael McGrath, you will be better off by approximately about €2,000. If you're in a couple, essentially it should be somewhere between €2,000 and €3,000 a year. And for anyone with children, again, roughly speaking, due to the tax measures and to certain benefits to children, you should fare off about 3,000 to 4,000 a year better off. And again, if anyone wants to ask questions, please do feel free to populate the Q&A. So really the main headlines on a tax perspective, and don't forget, tax is one of your biggest costs that you're going to suffer throughout your life. And I'm going to talk briefly about something that did come up today, which is that a lot of us are not utilizing tax rebates. And Michael McGrath made a reference to this, that they're going to do some more, I suppose, advertising around how to do that, but it's really straightforward, and I'm going to touch on this towards the end. But one of the main measures is for anyone earning over 42,000 a year, you will benefit by an extra €400 that you will not pay tax on until you reach that level of income. So typically, previously that was 40,000, and therefore you're going to be better off by €400 a year for anyone who's earning over 42,000 a year income. As well as that, the universal social charge is going to be reduced from the 4.5% band down to 4%, which in addition to the ceiling being increased, will give you another €300 a year. And one of the increases to minimum wage took effect today, which I think from January, and it's going to be a further €1.40 per hour, bringing it up to €12.70. Just in respect of housing, and this has been probably one of the most topical areas. It certainly got very political today. I was listening to it all afternoon, that they're going to provide mortgage interest relief for any tracker or variable rate mortgage holders as of the 31st of December last year, up to the €1,250 per property. But as long as you have a mortgage at the time of 80 to 500,000 euros, which seems quite unfair for anyone who has a mortgage outstanding as of the end of last year of less than 80,000 euros. And again, this is quite a contentious political point, but again, just to understand the detail. And one of the things that we were discussing just before this was that there is sometimes a lack of detail, particularly in relation to when these reliefs will kick in, and also what exactly they are going to be. And normally this is kind of published in the following days, typically in what they call the white paper. But again, it's worthwhile just bearing in mind that some of these reliefs do not take place automatically. The rent tax credit, which surprisingly about 50% of people still haven't claimed for last year for, is being increased up to €750 per year. And they've also now included any students that are renting a room or have what they class as digs accommodation, and they're going to backdate it to last year, which is something definitely for any parents that have students who are renting accommodation that can now claim up to €750 for last year, this year, and what looks to be the next 2 years. And then finally, landlords. There was a lot of talk over the last few days about exactly what relief landlords will get. These are the single and landlord holders that became kind of accidental landlords over the last 10, 15 years. And essentially, under certain quite strict conditions, which is that you need to keep the property for at least 4 years to avail of this. They're going to provide a reduced tax rate from the high rate of 40% down to the standard rate of 20% for €3,000 next year, increasing to 4,000 for the following 2 years, and then 5,000 in the fourth year, which works out to be about €600 to €1,000 of a benefit. But again, the important criteria is you need to keep the property for at least 4 years. The Help to Buy scheme is going to be extended, no major surprise here, to the end of 2025. And one of the other things is that there was reference around the fact that this local authority affordable housing scheme, and again, I'm happy to explain this in more detail to anyone, is now applicable for anyone to also avail of the Help to Buy scheme. Again, please feel free to ask any questions, guys. We will try to address them during the course of this or at the end, or indeed feel free to email me separately afterwards. On childcare, for anyone who has a child, there's going to be a double child welfare payment, obviously worth an additional €140 per child in December. They have said that there's going to be a reduction in childcare costs of 25%, but again, there was no real detail given as to what that exactly looked like, and I'd be interested to see what that actually means. In relation to child welfare payments, they're going to be extended to children over 18 who are still attending secondary school. The free school books will be extended, and also families with income of less than 100,000 who have college fees are going to be halved to €1,500 for undergraduate students. I suppose for anyone who's in a separated situation, again, another area that we were looking to get clarification on was how's that going to be measured? Third level student grants also are going to go up by about €300 this academic year. Cost of living, again, quite well flagged over the last couple of days, with that the energy credits are going to be increased up by another €450, paid over a series of a few months. Interestingly, electric vehicles came up, which wasn't really mentioned much over the last few days. Essentially, they're going to suspend this tapering of relief. This was whereby it was becoming less attractive to have an electric vehicle. I think the government have finally realised that they were providing less of an incentive for people to move over to electric vehicles. What it means is that essentially for the next 2 years, you will get relief of up to €45,000 on the value of any electric vehicle. There's also going to be a lump sum payment for recipients of fuel allowance, and that the reduced VAT rate for gas and electricity will also be extended for a further 12 months. And unfortunately, anyone who smokes cigarettes is going to be hit further. Thankfully, not anyone who drinks alcohol, that they didn't increase the duty on wine or spirits, or indeed beer, but they did on cigarettes. So again, it would be something, I suppose, for people to be conscious of. So just from a financial advisory perspective, and I was looking out specifically for what there might have been in relation to pensions, and there were no mention of really pensions apart from any pensioners who are going to receive an extra €12 of a pension per month. But interestingly, there were massive changes to the pension landscape in January this year. And we're going to be talking more to business owners and any senior managers on a further webinar, and I would encourage you to look out for that. It's on the 21st of November, about how you can use your pension very tax effectively. And it's really given massive impetus, as I said, for anyone who's either a senior manager or a business owner. One of the things that wasn't mentioned at all was the fact that there's going to be a review of what they call exit tax, which basically affects any of the insurance company savings plans. And it sounded to me that Michael McGrath was going to look at perhaps reducing the exit tax rate down to fall in line with capital gains, which would be a big plus, as well as the fact that this is also a tax that applies on any life assurance or serious illness policy. So again, it was interesting to see, and I'd be interested to see what happens next summer when he said the review will be ended. One of the other things that we've been discussing over the last number of months is that the other complement to pensions, and the only other way that people can reduce the tax that they pay in respect of earned income or indeed property rental income, is through a tax scheme called the Employment Investment Incentive Scheme. Now, interestingly, Pascal Donahue said the scheme, and he said this 2 years ago, was going to end 3 years from then, which would imply next year. But thankfully, Michael McGrath said today that they're going to enhance the scheme next year. and that he didn't say specifically, but he absolutely implied it, that it's going to be extended. And it was one of the big pluses that I took from the budget, that this scheme is going to become, I suppose, a bit more generous. They've said that the term is going to be reduced to 4 years specifically for any of these qualifying schemes. And again, it's something that from anyone who's looking to reduce the tax they pay, I would encourage them to consider, and it's something that we would speak to you about in Alpha Wealth. Finally, and again, before we kind of take any questions, and please do feel free to throw any questions into the Q&A. One of the things that the government have said that they want people to do, and I've often encouraged this in reviews with people, is claim for tax relief that you are absolutely entitled to. And there's about 180 million due to individuals of refunds. And you have up to 4 years to claim any credits or reliefs that you're entitled to. This is the rental rent tax credit, for example, that I mentioned earlier, that's just been increased. This is claiming for staying at home, particularly during the COVID period, or for anyone who works from home, either full-time or part-time. Any other reliefs, for example, if you got married or divorced in the last 4 years, there is an impact in relation to claiming of credits as well. And the best way to do that is using the Revenue Online system. We can send you a very simple step-by-step guide, really easy to use, and it allows you to claim all of these credits within the space of a few minutes. And it's one of the things that I would absolutely encourage you to do. And as I said earlier, the government are going to provide, I suppose, a kind of a information session around this. And you should see this advertised over the coming number of weeks and months. So that was really kind of the highlights of today. Clean's going to address any questions that came up, if anyone would like to add any ones to the Q&A. Sorry, Clean, I think you might be on mute there. We can't hear you.
Okay, can you hear me now?
Yes, I can. Thanks.
Okay, a question has just come in around the mortgage interest relief. Is it not available to those people that are on fixed rate mortgages?
It's not, unfortunately. And I suppose the rationale, even though I don't really think that it's particularly fair, is that if you want a fixed rate mortgage, they've implied that you weren't affected by those interest rate rises, which seems ridiculous, because if you had fixed your mortgage late last year, before the deadline date, which they've accrued as the 31st of December last year, you could be on, quite an expensive mortgage. And unfortunately, you won't benefit from that mortgage interest relief.
Just in relation then to the company cars, any mention of the 10k allowance on the original market value of the company car that was introduced this year to lessen the burden of the BIK changes? Will it stay for 2024?
Yeah, thank you very much for the question. Yes, it will. And that was part of that allowance that I spoke about earlier, this extension, allowing people to claim up to the 45,000. And 10 of that actually was this 10k allowance on the original market value, as well as the 35,000, which is the year that we're currently in. It was reduced from 50 down to 35, and it was going to be reduced subsequently. And they've basically paused it at 35 plus the 10k. That's giving you that 45,000 allowance on the open market value of the vehicle.
For somebody that has started a pension contribution, then let's say they quit it after 5 years, what would happen? Can they claim back tax, or can they claim back anything really?
If it's a company pension arrangement, you have entitlement to draw that pension from the age of 50 onwards. If it's a personal company pension scheme, you can only access the scheme from age 60. I can certainly give you some guidance. You can stop paying into the pension at any stage, but typically there's no ability for you to take back contributions unless it's a company pension plan and you leave the company within the first 2 years. But in this instance, it looks like that wasn't the case.
If you were on a tracker mortgage in December at the cutoff date and have subsequently changed to a fixed rate in 2023, are you eligible for the interest relief?
That's a good question. Our take on it, and I'd like to come back to you directly on this, is you cannot. I think that they've stated that it needs to have remained, because obviously the whole point is that they're trying to assist people. But again, that's a good question. And if you'd like to reach out to me directly, My email address is very simple. It's nick@alphawealth.ie. And I'll happily come back to you once we get that point clarified. But I do think that that is one of the things that, again, this goes back to what I was saying about the devil being in the detail.
Would love to hear more about the Help to Buy scheme.
Again, I'd be happy to send you on information and explain how the scheme operates. Essentially, the Help to Buy scheme allows you to claim up to €30,000 against the deposit for a property based on income tax that you would have been subject to over the last 4 years. You can Google Help to Buy. There's actually quite a, I suppose, an easy to kind of follow explanation of it on the government website, but I'm happy to explain it on an individual basis. One of the things we will do is we'll send the slides from today, and I'm happy to talk to anybody on a one-to-one after this kind of webinar. We are offering an opportunity for people to get more specific guidance about their own personal situation in terms of mortgages, pensions, savings, and also all forms of tax reliefs, which is something that, you know, we typically do for individuals.
That's really it in terms of the questions, but I've had one or two separately. Nick, what do you think is the highlight of this budget today?
I think there's been a lot of, you know, I suppose, positive changes. You know, we're all going to benefit from it to start with. The second thing is that even from a point of view of tax reduction, we should typically, at the very least, for anyone who's working, of course, will be better off by about 1,000 to 3,000 a year, depending on your personal situation and how much you earn. So look, it'll be more money in people's pockets. I suppose the key thing, though, is in terms of your own individual situation, make sure that you're aware of the changes. And as I said, we try to sort of formulate in a way that makes it a little bit more meaningful. But the key things are, you know, make sure that you're claiming back for any reliefs that you're eligible for the last 4 years. It's really important that you do that because there's a lot of money being left behind, particularly the rental tax credit. And again, it just, you know, surprised me that people aren't getting money that they're completely entitled to.
And how do you feel that people can utilize these changes to make their money go further?
The one thing I keep saying, and anyone who's listened to me probably sick of hearing, is that you should do a monthly financial budgeter. And I do it typically every 6 to 12 months. It's available. You can access it on our website, alphawealth.ie, or indeed any of the budget calculators. But unless you have a handle on what you're earning and what you're spending your money on, it's really difficult to kind of make your money work for you. And then it's a case of just compartmentalizing that into short, medium, and long-term accounts, obviously taking advantage of these opportunities as they present. We will be following up, guys. Sorry.
Just to ensure that you will be sending out a step-by-step guide of the key points that have and the insights that have been shared today as well.
Absolutely. And I'll also include the revenue online system as to how to use it. I think for me, that's something that everyone should be doing. It's so straightforward. I'm not particularly tech savvy, but I use it. And honestly, there's so much money that you can get your hands on. And it's probably the biggest thing that I would suggest that people would look into. I will put it on the email. And if anyone wants further information, please feel free to reach out to us. Thanks very much for your time this afternoon. And as I said, keep an eye out for future webinars. The one on the 21st of November for any senior managers or business owners. There's a huge opportunity between now and year end to take advantage of. Thanks very much again, guys, and enjoy the rest of the afternoon.